Now, as we're heading closer and closer to the election, we also have many news events coming up, particularly this week, that could cause quite an immense level of volatility. And we need to be aware of that this week. So I'm going to go through all of the things that you need to know, as there is a news event almost every day this week. And I'm going to be showing you what to look for on the charts. Now, if you're new here, welcome. If you're returning, welcome back. Apologies for my voice. It's still not getting better. But after this video, I'm going to take a day off and rest my voice. So hopefully today's the last of it. But if you appreciate me coming to you anyway to give you my ideas on the market, be sure to smash that like button, hit subscribe if you're not already subscribed, and let's get into this video. So I'm looking on the 15-minute time frame because I want to show you the similarity between this week's price action out of the weekend trap and also last week's price action. So if we look at the last weekend prior to the one that we just had, we can see here that we created this weekend trap right here, which is essentially where price just goes sideways. It's low volume, nothing too exciting. And then just prior to the market opening, we had this move to the upside that extended the high from the previous high, and that created our current high of the week, which sits at around 69,570. Now, this move to the upside happened in the dead gap zone last week, and that creates the false move, which then led to our 3-day trend to the downside. That downside came back to retest the daily time frame wedge breakout. So it wasn't a terrible retest. We were hoping for that anyway. Now, when we have a look at this week, we know that the week opens with an attempt to wipe out the closest liquidity available. And you can see these numbers right here show all of the liquidity that was available within this zone right here. And we tapped into it initially to take out half of it, came back, maintained the structure, and we've broken through it again currently to take out the top part of it. So we're going to refresh that in a second, but I just wanted to show you how that trap works, because that's going to give us an idea of what to look for the rest of the day and whether or not we're going to get something similar like this where we start to head down now. So zooming out to the daily time frame, we're going to start from the top down, and we can see on the daily time frame we're doing what we are expecting the price to do. After our W formation, we've had our rise level 1, we've had our retest with the 200 EMA holding right there, we've had rise 2, and we're expecting this to consolidate, potentially build a bit of a flag before we get our final rise to the top. Now, if you happen to catch my video yesterday, you will know that I was talking about a level just under $70,000 that has a very high level of liquidity, and it's the highest level that we have above the current price. That doesn't mean that we don't have anything beyond it, but it is the most important target for now because that level is so high. We need to see what happens there before we're just going to draw the assumption that we're going to break 70K and then break the all-time high and then continue into parabolic phase. So let's have a look at where the liquidity is to get a better understanding of upside targets. So this here is the main area of interest for me currently, okay? This is the kind of the lime green area. It's the highest level of liquidity. When you look at the key down here, the more we go towards the yellow, the higher the liquidity that is available. And when you look above price, the brightest area is this one here that is at about 69, 800, 900 kind of area. It's just under the 70K zone. Now, that's not to discount what is higher, because if you look at these green zones right here and you match that up, that's about $30 billion of liquidity, and that is still significantly high. And that peak takes us to about 71K, and then there's another pocket here up to about the all-time high. So the point being, when you have a look at this and then you match that up to a chart, you sort of understand why that liquidity is building. So those levels are showing you the liquidation points of everyone who is opening a short position, right? Because it's above the current price. So it makes sense. When you just look at this range, there are still going to be skeptical people out there that don't believe we're going to break the all-time high. I'm personally one of them. Like, I think we will break it eventually, but I think if we break it prior to the election, which I spoke about in my video in detail yesterday, then I would worry that the breakout might be a fake out. But of course, we'll judge that if it happens at the time. Even though I have these thoughts, I am happy to ride the trend that is there, and the trend is currently bullish. These thoughts that I have, all they do is encourage me to make sure I protect my profits along the way and just not lose my head about it, really. So if you had a bearish mindset, you would see that, you know, there is a level of resistance here where bears would have opened up short positions, and that's what's giving us that 69.9 liquidity currently. Then we also would have bears that are going to open if we return here, because that's another level of resistance. And, you know, that kind of goes all the way across to all of these these three levels here. And then finally, we have the last area of resistance, which is the current all-time high. So you would expect that people have opened shorts here. They're going to open them if price gets here, and they're going to open them if price gets back here. And all of those three things are going to build more and more liquidity above the current price. And if the market maker wants to continue price up, then the liquidity is available there for them to do so. So when I look at the daily time frame alone, I think it's possible that we're just retesting this wedge right here. And I don't see a reason why we wouldn't push up higher than where we are now, simply because of that liquidity that is available above price. If we go back and look below, you'll see that it's quite blue. And when we get into these blue zones, you can see down here on the key that is not a lot of liquidity. So there isn't a huge reason for the market maker to send price down. There's nothing easy really for them to grab. It's also, to be quite honest with you, it's a bit of a worry that we're not building liquidity below price as much as we are above price, because that means people aren't opening as many long positions as we would like to see. And that also is a sign that potentially retail traders are quite skeptical of this move up. So just keep that in mind. When we look at the heat map orders, even like if you look below price, there isn't really any huge orders. We would see red lines, similar to this, or potentially white. And I'm not seeing that below price. Even above price, it goes kind of like from dark green to light green to white to red. And so the lightest I can see is this green here at 68,900. Now we're trying to get to 69,900. That's what we want to get to. But this might cause some sort of like a temporary pullback. But if these orders stay here and price does push up to this level, we might then, have a little bit of a rejection. As long as we maintain structure, the orders get taken, we pull back a little bit, we might continue up. But we just got to make sure we maintain structure. If we don't, if we pull away from that area and then we come back to create an M formation, that's when you would assume that today's move to the upside when the market opened was the false move week beginning, and we're going to start our 3-day trend to the downside. Now, when we look at the 12-hour chart, we can see we're in a rise one. This chart has not been changed or touched since we were in this flag formation. So we're expecting the breakout, which we got. And the area of interest is this vector right here. We've returned there once, we've returned there twice, but we haven't broken through it just yet. And again, when I have a look at this, it just looks like it's building more consolidation. When it's building consolidation between rises, we assume that it's just the market maker building their contracts to be able to break through next. So this is making sense to me why I'm now seeing those orders at 68,900, because if you look where that is in relation to the current candles, it's just about creating the resistance of this consolidation. And it might even be that, something, because they're not huge orders to cause a massive reversal. So it might just help us create a bit more of a flag before we eventually get, hopefully, our last rise on the 12-hour time frame. On the 4-hour time frame for Bitcoin, we had this V bottom. I do count this as 3 rises that are complete. This candle right here took us back to the exact prior resistance of this candle right here. And that's why we've seen a little bit of consolidation ever since. We do have those shorts that are right in that vector candle zone right there. So if we are going to see more upside, it is crucial that we break through this zone next. However, it may not be that it goes straight through from here. Again, if price comes back and maintains structure with a higher low, I would still assume that we're going to eventually move out into the upside. But one thing I want to check on the lower time frames is if I do see any weakness there, because I wouldn't even mind a 200 EMA retest on the 4-hour time frame, because that is essentially still just going to be consolidation, and it's going to be a lower entry for a long position, which gives you a better risk to reward anyway. So let's go and see if we have any evidence of something like that potentially happening on a lower time frame. Now guys, there is still 8 days to go in the exclusive trading competition with Bitunix and Trade Travel Chill. You can win a trip to Dubai to come and hang out with me for 5 days. We're going to show you around this beautiful city. You're going to have an amazing time, and you're going to get to have a face-to-face mentorship with me where you can ask me anything you want about crypto, and I will do my best to answer you. So get involved in this. The link is in the description of this video. You still have time to win. And if you do join Bitunix using the exclusive link down below to enter this competition, not only do you get a 25% trading fee rebate for the rest of your trading life on this exchange, you will also get access to our free Discord. And for the duration of this competition, you'll also get access to our team's trade alerts to help you build up your chance to win this comp. Everything is detailed in the description down below, so be sure to check that out. So let's assess what has happened today since the weekend. You know, it's quite clear that traders were trapped early in the weekend this time. We had the US session have a very, very large hammer to the downside. That was crazy volatility. I wasn't on the charts at this point in time, but I'm glad I stayed out of it now that I look back on what actually happened. And then this move here actually happened after the US session closed. And this absolutely would have been a trap because price just came right back up in a V-shaped recovery and we just went sideways ever since. Now we've broken out to the upside. So if there were people that shorted through here and then got trapped back at entry, they were held at their entry all weekend in hopes that the market would open bearish. And I think this was on bearish news. There was war news and there was also USDT FUD that always comes out when price is bullish, and expect a lot more of that in the parabolic phase, by the way. But obviously that did create the trap because look what happened next. And so as you know, Friday sets the trap into the weekend, and the weekend trap is not a trap move, it's just consolidation. The trap is that you get stuck in a position that doesn't allow you to hit your take profit or your stop loss, and you're just stuck in an open position, and that happens by consolidation. So this is actually the perfect example of what the Friday trap into the weekend consolidation looks like. And then the market opens breaking out to the upside, either liquidating these people if they were high leverage. The high leverage people were 100% liquidated, but the rest, you know, are just stuck in positions that are going against them currently. Since then, we have been trending. So we've created a high here, a higher low here, a higher high. As long as we're trending, you trade the trend. This candle right here was in the gap of Asia to UK, and that broke the initial high of the day. That is generally positive. And now it looks like UK is having a bit of a retracement. Any of these EMAs here are going to be EMAs to look for areas to get a day trade position. I say day trade because I'm on the 15-minute time frame, so you don't expect massive targets when you're on a smaller time frame. But if you're lucky enough, something like a high of the day retest around the 50 EMA, 67, let's round it off to 68,000. If you could get a retest around there, or even just the current high of the day, so 68,100, let's say 68 to 68,100 would be a really beautiful retest for a day trade if you were lucky enough to get it. But if we're really bullish, we won't get it. You could have your stop loss then under the 50 EMA, and you could have your target at these shorts here, and that's going to be a 4.6 to 1 risk to reward. That's a great day trade. You know, you could be out probably before the end of US and free of any other potential volatility coming via news events, but we may not be lucky enough to get that low an entry. So that's just a trade idea. Don't chase price, knowing that there are those shorts at 68.9 where the price is now. If you're not already long, you should be sitting out unless price retraces to give you a better chance to enter. Otherwise, you're looking for areas to reverse to take a short position. And if there is no signal for that, which I don't think it would happen until we at least get into this area, then at this point in time, I still think we're better off riding the trend. So leave shorts alone unless it's a very, very clear 3-level rise, M formation, session changeover. That's the only time you'd probably do it. Otherwise, you would be better off just taking long positions off higher lows when you can get really good entries. Now let's go over these news events that we've got coming up this week. So today is really the only free trading day. We don't really have anything today, and therefore the trend might continue for all sessions, because usually when we trigger a reversal, it's on a news event or a session changeover. So definitely watch UK to US. If there is no signal there that price is weak and this trend looks to reverse, just keep trading your long positions, because we don't have a news event to basically be used as the excuse. For Tuesday, our significant event is going to be JOLTS job openings. That is going to happen around the end of the UK, in the last hour of the UK session, and that is usually when we expect volatility as well, as the market makers are taking profits. So definitely keep an eye on JOLTS job openings for Tuesday. Now this week we also have Japan's rate decision. So this week in particular, the news that comes out of Japan is significant as well, and that's all happening around Thursday. So it's tentative currently, but Wednesday we've got advanced GDP. Thursday is a lot of Bank of Japan news. Keep an eye on that. We've also got core PCE and unemployment claims. And then Friday, we've got all of the employment kind of news coming out as well. So yeah, if this week is not obvious to you, it's probably going to be a week that it's better off sitting on your hands. And if you're in good open positions options already, just make sure you've got your stop losses in place, you're protecting some of your profit, and that you are taking profit along the way.